Alrighty, now the thing I forgot to mention in the previous theory lesson was the actual timeframes I'm using. So I personally, at the date of recording, today is the 11th of November 2023, have basically only tested using these timeframes. So higher timeframe 4H, medium timeframe, the most important timeframe is the M15. So same rules would apply. These are the POIs that I am trading. Price must mitigate an M15 POI before I drop down to the lower time frame to look for the entry. And then I have tested using the M5. Okay, I haven't even looked at the M1, not even once for this, just using the M5. So these two timeframes are quite close together, but it actually works quite well with this particular entry model because obviously we are trading with less confirmation, right? We're getting in before that new chalk and PBL fail happens. So actually having the time frame that you were picking for your POI, the M15, and that being reasonably close to your entry time frame, you'll see that's actually quite helpful because it reduces the false signals. And yeah, you'll see it. Tomas currently is doing a lot of testing on, using the swing trading approach with these timeframes here. The results are so far looking exactly as we would hoped and planned, but he's just doing a bit more on that to make sure, we make sure that is robust and he finds, his individual lessons and refinements to that, but we'll talk about that in due course when we are ready for that. So this is what I've done my testing in. I'll talk about this in much more depth in the upcoming video where I go through the data that I've collected so far and some suggestions on to how you may want to approach that. But this is essentially what I've done. So yeah, let's now dive into a real chart example and show you how to apply the theory to actual examples. So we're actually going to use an example that literally just happened yesterday. So for those of you guys who are watching this content just as we release this, I'm sure you will be familiar with this price action if you trade euro dollar. So very simply, the 4-hour swing structure is bullish. Okay, we have had a 4-hour break of structure and we can clearly see that we're starting to have that 4-hour swing pullback, right? We've come into this 4-hour flip. It's quite a large zone. It's kind of more of a supply to demand range. Okay, we've tapped into it. If I actually get rid of these lines so we can see, I'll zoom in a little bit. When we tapped into that range, we then had a bullish change of character. So then it was looking like potentially, okay, the 4-hour swing pullback is finished. And now potentially we're ready to take out that swing high, right? That hasn't happened. We've kind of come up into around the top of the supply range, right? Had that mitigation and then had a bit of a V-shaped sell-off and a change of character. So now the 4-hour chart in the short term is looking a little bit tricky to know what the direction of bias is, right? Like, are we now probably going to have a deeper pullback, potentially into here or here before we go? Or are we just going to chop around and range a bit, right? 4-hour chart isn't looking super clear for like an intra session bias. That's kind of the point I'm trying to make here, okay? So that's fine. Let's jump down to the M15 and see if we can find, a bit more clarity for a potential intraday trading opportunity. I'm just going to play forward the M15 price action a little bit nearer to pre-Frankfurt Open for our London session, okay? So, we can see here that the M15 initially switched bearish to facilitate that 4-hour swing pullback. Then this big gray box is that big 4-hour demand range I was talking about. So we know there's a possibility that the 4-hour swing pullback could end here, right? And then we would be targeting that next swing leg. The M15 then switched bullish, right? And we had two bullish bosses to the upside. So that was starting to look likely that we may take out that 4-hour swing high, but we mitigated this 4-hour supply range to the left, right? The big gray box area. And then we have sold off and we've switched bearish again. Okay. So the M15 swing is bearish. So that's signaling, that potentially we may be getting a deeper 4-hour swing pullback, or we may just be starting to range, right? This is a Friday. It's coming to the end of the week. We've kind of taken these lows down here. The immediate bias isn't super clear, but let's see, right? But the swing structure is bearish. So if we're looking right coming into session, how can we potentially trade this? Well, right now there's nothing going on. This M15 low here has not broken any structure, right? It's just a weak low. For shorts, we want to wait for price to pull back up to, one of these POIs, that value, so we can try and capture that swing lower high to see if we're going to get that next leg. And for longs, nothing going on, right? We don't want to be buying from a weak lows. So ideally for longs, you want to see at least a strong liquidation, and then you want to see structure shift in your favor, right? At minimum, like an M15 chalk. That will give us a fresh POI, right? And then we can look for the trade. Or what would be even better is if we get that strong liquidation and then we see the internal structure clearly shift bullish, and then we can look to follow that internal structure to play the swing pullback, right, into supply. And then we could potentially look for shorts to go down. Okay. If you're at this stage in the course and you haven't skipped ahead, hopefully all of this should be very, somewhat familiar to you, because again, you're going to be sick of hearing me say this throughout this module, but I'm going to keep repeating it because it's important that this is drilled into your mind. Medium time frame, POI selection, building that medium time frame and hard time frame narrative is the single most important thing with this strategy. Okay. It's the most important thing. Once you have nailed that skill, the rest of it all falls into place with the entry model. Okay. So at this point, just waiting for more development. Let's see what happens. So those lows get taken. Okay, then we start to get a bit of a liquidity sweep, as we can see, price grabbing the orders below these Asian session lows. We also have obviously these big equal lows to the left as well. So we've just taken a ton of sell side liquidity below here. And if I play a little bit more forward, we can now see that big V-shaped reaction, essentially giving us an internal bullish break of structure there to the upside. So we've had that sweep liquidity, internal structure starting to shift to the upside. Now there's decent probability that we can play the swing pullback for a quick move, potentially up towards this supply zone, right? Just a quick in and out move to play the swing pullback. And we have a very obvious level of demand to, a POI to look for potential longs from that led to that IBOS. Okay, so obviously we're just focusing on LC-2A. We're going to look for that fake break liquidation on the M5. So now what you can do, if you're happy to trade this long idea and if you like this POI, is set your alert on the POI and wait for that to go off. So we're going to sit patiently and wait for it to go off. Not happened yet. Price is moving around. Now our alert goes off. So do you know what I'm going to do? I'm actually going to talk through the current, what you're used to. We're going to look at liquidity entry model 2A. The traditional fake break entry model that you should be familiar with. Okay, so at this point, how would we trade that? Well, we have our POI mitigation. Step one, we know we need that to happen. That is a minimum criteria. Step two, do we have an active strong liquidation, right? This is for LQEM2A. Yes, we have had a fake break. Okay, price has come down, it's come up, it's come down, and then we've broken that high, right? So we have that change of character. Now, yes, for those of you who are being 100% true, at that moment, this is actually the fractal high, and that was the fractal low when we pull back. So this is technically what we call an eye chalk, okay? But we use it with the entry model, right? When we get essentially that pro trend move where price is pulling back and breaks the high, we just want to see that this low here did actually break some structure, okay? So here we essentially have that M5 eye chalk, if you want to call it. You want to be completely mechanical there. This low broke that high. So now we know we have the fake break. We take the extreme of that leg, and that is our strong liquidation. So you should all be very, very familiar with this. If you're not, please do not skip ahead to these lessons. Go back through the course. This needs to be you need to be very, very comfortable with that. Okay. So we have the low breaking the high. Now we have our strong liquidation. So for the old entry model, LQEM2A, what is our next step? Our next step is to identify the PBL. This is the PBL that led to the break of the low. Okay. So what we would need to see is we would need to see that to fail, and we would need to see a change of character back in our favor, right? So there's quite a few steps for price to still form for us to look to get involved. So our POI is still respected. That's good, which means the trade idea is still valid. Now we have a V-shape, right? POI mitigation, V-shape. The PBL has now failed. That is our mechanical way of saying that potentially institutions have used the sell side liquidity below this strong low. They've used that to get long, and they've now regained control, right? Demand has regained control over supply because our PBL has failed and structure has shifted back in our favor. So now we have seen everything we need to see. There's no PBL flip. So now we can set our order on the extreme, right? This is liquidity entry model 2A. Of course, you can use the 25% rule to try and improve your risk to reward a little bit. But of course, increasing your risk to rewards can also increase the probability of us not getting tagged in, because price has to pull back even further, right, than the top of the zone to get us into the trade, right? So let's see what happens. We set our limit order. Price is pulling back. Do we get tagged in? No, we just get swerved. Price goes without us, and we would have to cancel our order. Sad face, right? The great thing about this entry model, like I said before, is it gives us tons of confirmation. It is very, very mechanical. And unfortunately, it's a bit over refined sometimes, and you don't get quite tagged in because, if you look at it, this is quite, if we look at the M15 for a second, it's quite a small range, right? It's just a little movement up, a few candles, price is coming back in. By the time we fill up those orders, if we're on the M5, what do we have to wait for? We have to wait for that full entry model to play out. And very often, it's not going to come back and tag us in. It's just a quick move in and then price is ready to go. You can see here with the M15 price action as well, right? We've taken that high, that creates new M15 demand, price fills up those orders and goes, right? So especially when you have tight price action like this, and then you're only dropping down to the M5, which isn't a very big gap, it can be a lot harder to then get enough price action to play out to then get you into the entry. So let's show the small tweak, but powerful impact that has to this, whole scenario. So let's just bring it back a few candles. We don't need to go over the whole thing, right? Again, the first thing we need to do is the exact same step. We identify our POI, we've built our directional bias, and we're waiting for our alert to go off. Okay, our alert goes off, ding, 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 whatever. Oh, I don't know why I'm doing alert noises. Anyway, ignore that. So the strong liquidation is the next thing we look for. Has one occurred? Yes, we have a strong liquidation here. Okay. Now, this is when we can start to look for an entry, but there's one other factor that I don't think I've mentioned that is important, and that is we do not want to see the PBL having already done its job. Okay. So let me show you a quick example of what I mean. So if I draw, this would be your M15 POI, and this is the exact zone you'd be looking to trade from. Okay. Now price on the M5 is pulling back into our zone. We're waiting for our alert to go off. Price then does the fake break or a potential fake break, right? Breaks this high. This is now a strong low. Price then liquidates the strong low. Okay. So now we have our strong liquidation, but we do not have our POI mitigation yet. So we cannot look for an entry, right? All we have is the strong liquidation at this moment. Price then pulls back up and it mitigates the PBL that liquidated the strong low. Okay. Then if price holds that PBL and then it makes a lower low, so I'm going to define that with a candle body closure of the low, right? It makes a clear lower low. Then we can say that the PBL is held and it's done its job. So I'm just going to draw that on for the sake of clarity, right? So we get the M5 chart here. That creates a fake break low or a strong low because it's broken structure. We then get the strong liquidation of that low. We can then identify the PBL that liquidated that low. Okay, here it is. If price pulls back up and the PBL holds, then price comes down and it makes a candle body closure break of this low. Okay, we can say definitively that the PBL has held and it has done its job, and its job is to make a new low. So what that means is then when we get our POI mitigation and we're ready to now try and trade this POI, the next question we always ask ourselves is there a strong liquidation that, is active, that's available? Well, yes, we had a strong liquidation, but it's no longer active for us, because if we're saying that institutions have used the sell side liquidity below this low, if we think they've used that to get long, we can't say that they have because they haven't caused the PBL to fail. In fact, supply has stayed in control and we've come lower and it caused a lower low, right? So when we get here, if we see that and we see the PBL has held, then we ignore it. This is no longer relevant for our entry and we need to see a new fake break form. If that happens down here, we get a new fake break, right? So this low here breaks this high and then it gets liquidated. So there's your liquidity, and price is still within the POI. The POI has to be respected. Then we can enter. Okay, so that's the key thing. Now, on the testing I've done, again, I'll talk about this in the upcoming video where I go through it. This very rarely happens, or at least it will more often than not give you the entry down here that you need. Okay, it's pretty rare that like the PBL in this way kind of, did its job and then there was no trade. So you don't need to worry about that massively, but that's the current rule that I'm using, that if the PBL is held, I'm not going to get involved. That may change in the future, we'll see, but with the current requirements we have, that's the rule I am following, okay? Right, so coming back to here, we want to get long. Here's our M15 demand zone. Our alert goes off. We wait for our strong liquidation. We clearly have our fake break. There's our liquidation. So the very moment that we get that liquidation candle, right, and we've had our POI mitigation, what we need to wait for is for this entry candle or liquidation candle, I'm not sure what we're going to call it, but this exact candle that causes a liquidation, we need to wait for it to finish closing. So if you look at the bottom, this is the 9:25 candle. So if it's a 5-minute candle, we need to wait until 9:30 before we can place our order. At the very second this candle closes, we place a buy stop order. Okay, so up until now, we've been using buy limits. A buy limit is when you set the order, price is above it. So you set a buy limit so that price comes in and takes you in. A buy stop is when price is below your order, when you set your buy order, and price takes you up into the trade, okay, if you don't know that. So we will set our buy stop order above this candle. Now, I would advise you set, at least whatever your spread is with your broker above the candle, so you have that room to make sure that the price actually breaks the candle to tag you in. But you'll need to look at that with your own testing and what your own broker spread is. Stop loss goes just behind the candle. Again, you will need to do this in your own testing and factor in your own broker spread with what you need to deal with. Let's for now just keep it simple and say a pip. But you'll need to do this with your own testing, okay? And I'll talk about this again in more detail when we get to the back testing. And for management, just for this, we're going to keep it simple, and we're always going to target 3R. Let's just say 3.3 to factor, roughly in commissions, okay? Again, I'll talk about management at a later date, but we're just going to do fixed R, set and forget, 3.3, keep it nice and simple. No trailing to break even, okay? So get the strong liquidation, the candle closes, we set up buy stop loss below the low, make sure you have your buffers on either side, okay, and now we wait. So one of three things can happen. We either get tagged into the trade, okay, perfect, then we just follow our management strategy and we do nothing, or we get an inside bar, right, where the price does not break the high to tag us in and it doesn't break the low. If that happens, then we just leave our order on. Otherwise, the third thing can happen is price breaks the low of this entry candle. If that happens, the very, very second that happens, the very second that price trades down, we will immediately cancel our order, okay? We'll remove it and cancel our order, okay? And then what we need to do if that happens is we need to wait for this candle to finish printing. And then as long as price is still within the POI, all right, this needs to be respected, then we will simply set our entry order on that new candle, okay? And again, if that candle breaks, we'll keep moving it down once the next candle finishes printing, only as long as this is still respected until we're either tagged in or the POI fails, okay? So that's what we do. So let's see what happens. Let's play this forward. Okay, so the very moment that candle breaks, we would cancel our order. We would wait for this candle to finish printing. Once it finishes printing, we can see it's still within the POI. So we set our new order, adjust your stop loss to however you need to do it, target, etc., etc. You need to resize it. So make sure you're using the plugins for MetaTrader, right, or whatever, to help you do that automatically. Now we get tagged into the trade, so now we follow our management rule, which, as I'm saying, is going to be fixed, set and forget, target 3R or net 3R, right? No trading to break even, and we either take a loss or a win, nothing to do, so we just pay it out. This is where we'd be trying to get tagged in on the LC-2A, right? As we know, we don't, and unfortunately, we hit a nice winner. So there we go. Bit of a longer video breaking it down, but I wanted to take it slowly and talk through all the small details in here because it can seem very simple, and it is, but I know some of you will miss some of the small details with regards to exactly how we cancel and replace those orders. Okay, we'll go through tons of examples. But yeah, so everything is the same. Literally everything is the same up until the entry model point. We simply wait for that fake break to occur, wait for the strong liquidation. As long as it's within the, we've had that POI mitigation, we set our entry order on the candle. If the candle goes lower, cancel our order, wait for the new candle to closure, and we keep doing that until we're either tagged in or this POI fails. If we get inside bars, then we just leave the order on. The only way we would cancel the order if we just had inside bars is if we come to the end of your session and your session has ended, and obviously you want to remove your order, okay? Pretty simple. We'll go through more examples. Actually, so let's have a look at the M15, right? We'll wrap up with this. So now we've played the objective. The objective was to play the swing pullback. We're coming into a POI that potentially we know that M15 swing lower high could form, or at a minimum, we may just get a phase B, internal pullback into here before potentially we get a deeper move. So let's see if we can potentially get a setup to play that play. Not necessarily the highest probable position in the world because you're trading phase B, which is against the internal trend. But let's see. So we have our POI mitigation. That's step one. Do we have a strong liquidation here? Not yet, but this high has broken this low, right? So we have an M5 chock, so potentially that can be our fake break. So what do? We don't do that. We draw our liquidity point on the high, and then we would set our alert and just patiently wait and see if price takes out that high. Let's see. So we get a liquidation. I went a bit quickly. Obviously, you want to do this slowly with the back testing. And there we go, right? So the POI is being respected. We have a fake break. We have a liquidation, some nice equal highs there as well, but we only care about the fake break. So let me bring it back even one more candle, okay? Now here we have the liquidation. We have the POI mitigation. So technically, once this 1:50 p.m. candle closes, you technically could enter here, stop loss above the high. But obviously, do you want to enter here? You've got to weigh that up, right? You've got to try and target past the swing low. Are you going to get your target there? I personally say the risk reward isn't there, so I'm not really going to want to take that in this scenario. So I'm going to wait one more. What happens? Price pushes up higher. Okay, we're still within the POI. We've got a much smaller candle, so now that's much more ideal. Okay, whatever your buffers are on the stop loss and the entry, right? Let's just say 6 pips. Again, we'll talk about this in the statistics video later on, and target, let's say 3.3R. Okay, so we either get tagged in, or if price breaks the high, I will cancel the order. Get tagged into the trade, so now we do nothing and just set and forget. Let's see what happens, and there we go. Okay, so you can see how powerful and effective this is. Now, every session is not going to be like this, where you just can trade both sides of the market and you get 2 winners in a row. Obviously, markets aren't always that nice, but this was a great example literally yesterday of just how it can play out. And for those of you who are experienced with liquidity entry model 2A, you would have seen setting your order there, no tag. Then if you waited for this, you would get the PBL fail and shock here. Then you would have set your entry order on the extreme, right? Because there's no clear flip. Then you would have got another no tag, and then the move's done. And then it's, the end of Friday, so you don't want to be looking for any more positions. Okay. This allows us to get in early, capitalize on the move, remove our risk before, that trade's barely got going. And it's super, super powerful. But I will say the caveat is you were getting in with less confirmation. So you can get on the wrong side of the market a lot if you are not skilled and done the work and the patience in building the narrative and POI selection. So I'll leave you with that. Okay. So the next few lessons, we're going to go over a lot more examples. We're going to look at sort of low, medium and high probability positions, and then we'll dig into the statistics and talk about backtesting.